this is Joe Rabil from Rabil Stock Research. So what I'm going to do today in today's show, I want to talk about the S&P volatility. I think that's pretty important. What's taking place there? It's unusually high on two different time frames. I'm going to show you the way I look at volatility. But I also want to look at the yields, the 10-year Treasury yields, and just show you what's taking place there because I think something important has developed. In addition to that, I like to look at the commodities, go through a few of the commodities, and then we'll run through the symbol requests that came through. But to start the show, I want to look at an understanding of trend alignment. And in a time like this, when market has sort of a decline phase going on, at least on a shorter term basis, I think you need to have an understanding, unless we get signs of real climax, that you want to be looking for trend alignment in 2 consecutive time frames. At least I think if you do that, your odds of success are going to increase. All right, let's go ahead and get going with this lesson. Okay, so on this discussion of trend alignment, one of the things that I've noticed through the years, and it always comes back when there's some kind of a sharp sell-off. I get a lot of people, questions, emails from both subscribers and others that are just viewers of videos that I do, that they're looking to pick a low. They want to get in off the low, or in some cases, they're trying to pick a top. All right. So they're trying to get in right off the bottom, or they're trying to sell right off the top. Okay. And what I try and explain is that you can do that periodically. And I'm not saying, if that's what you want to do, then that's fine. But what I try and identify are periods where we have trend alignment and I'm catching kind of the meat of the move, not necessarily the bottom or the top. Okay. And so let me just show you this graphic just so you can see what I'm trying to identify and play is this higher probability area here. Okay. Now there's a couple ways to do that to make it a lot simpler, but the key thing is to understand that you don't need to pick a low, and we don't need to be right there, right at the bottom. If a market is on a harsh sell-off, you can let it make a bottom, make it a turn, and then play when we have a much higher probability. So what I say a lot to my subscribers is that we're not trying to find low price. We're trying to find low risk. And where we have low risk is when the trend has shifted, and we actually see that happening in multiple time frames. I'm typically looking for a match in 2 time frames back to back that are showing this similar pattern where we were in a downtrend. So you could call this a stage 4 decline. This is a stage 1 base. This is a stage 2 uptrend. This is a stage 3 topping pattern. All right. And then we switch to another stage 4 decline. So what I'm trying to identify in 2 time frames is where we've got this stage 2 in place. All right. Now, what ends up happening in the way that I've designed my courses is that I actually trying to identify stocks on the smaller time frame that might be a little on the early side, but on the bigger time frame, they're showing good strength, and they're clearly in this uptrend mode, in this stage 2 uptrend. So if we can find those, then we can be a little bit early and then wait for some kind of an entry. It could be a breakout pattern, or it could be the start of some, new momentum that we buy the first pullback, and then we continue to play pullbacks until it looks like we're reaching a stage 3 topping pattern where the volatility increases. And it's the price action's a lot sloppier. So what we're trying to do is identify those periods, and we can go back and look even on a weekly chart. Here's the weekly where we had just a really solid uptrend. And that's where this monthly chart was here. Clearly trending above its moving average. It wasn't checking back to the 18-month, but clearly in an uptrend. And you can see how the weekly chart was the time frame where we kept on checking back to the 18-week. And then we can go back on the daily time frame, and we have this trend alignment where we can take advantage of pullbacks on the smaller time frame and as new entry patterns. All right. And so we're looking for periods where we've got an uptrend on the monthly and an uptrend on the weekly. So if I'm an intermediate term trader, I'm looking for periods where I'm in an uptrend, and we've basically had this period here recently where we found support at the 18-month and the 40-month. We had a pinch play here. Green DI had maintained basically enough strength here. And then once we turned up to the upside, we were in a pretty solid trend here. And we had that opportunity once this kind of clicked into place to play the meat of the move. Now, off the low, maybe you don't catch the exact low, but you when you have the higher probability periods, you can play these, and then you can actually switch down to a smaller time frame, and you can play the meat of these moves like this. We don't necessarily have to catch these bottoms. Now, I will say that the strategy that I use will allow you to kind of catch this before it turns into a clear uptrend. By using multiple time frames, we can catch entry right in here as this is turning and we're getting a reversal pattern. Okay, but the point I'm trying to make is that we want to have these higher time frames already in place. So that's kind of what I do. The reports I send out, especially the one on the Wednesday report, I put out, I'm looking for stocks that have trend and momentum in place on the monthly and the weekly. And then a lot of my subscribers will trade off of the daily charts, where they're looking for entry there and playing it for intermediate term moves. So it can be played in any way, shape, or form that you'd like. But the point I'm trying to get across today is that we want to make sure our mindset is to catch the meat of the move, the high probability part of a trend. And I think if we do that, our numbers are going to improve. We're going to get a higher win rate because you can be right off the low, but you're going to have a much higher probability of a lower win rate, higher probability of getting shaken out at the bottom. And now I will say, if we have climax, okay, I mean, if there's climax associated with the bottom, then that's a different story. All right. If we get real signs of legitimate climax, people puking it out, volume explosion, bearish sentiment skyrocketing, that's different. Then we try and take advantage of that. All right. And but when we're looking at our standard kind of pullbacks and stuff like that, you don't need to be in right off the bottom. I think just get that out of your head. And I think your numbers are going to improve just by catching these this meat of the trend rather than the bottom of the top. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. I'm on this page right now. You can see at the top, I've got my advanced trend and momentum courses. There's 3 different courses now. I've individually priced them, or you can buy them as a bundle, and they are lifetime access now. So I changed that. It's not year to year. Okay. And then we have the individual package. I have about 2 to 3 reports each week, plus a special video, weekly video for that package that covers a lot of details into what I'm seeing for the week. So if you have an interest, go ahead and take a look. Also, the book is on the book tab. You can go if this is a good place to start if you're new to my methodology. As we move into the analysis, my comments are for educational purposes only. Please do your own due diligence before making any investment decisions. So for those of you who watch my Friday morning stock market update on my YouTube channel, you recognize this setup. I've got the weekly S&P, the SPY on the right, and the daily on the left. And what I've done is I've got average true range, the 20-period average true range highlighted here in this second scale. With an 18 MA and this kind of purplish line overlaid on top for both time frames. All right. And what I'm trying to ascertain here is the size of the bars. You see these bars, this looking at the bars. Now we're using an average true range. So the true range is filling in the gaps. So this bar here would actually be that size because you're filling in the gaps. So you start to do that, you can start to see if we start filling in these gaps and what's taken place recently, you can see the size of these bars has increased dramatically on the daily chart. The size here was very orderly, and we had a declining volatility relative to its moving average. That's what we're looking for. I'm kind of watching the slope of the MA, And if that's declining, then you've got bullish trend and low volatility, which is a premium time to be doing trading for that time frame. All right, and then if you look at the weekly, we went through a period pretty much starting in the beginning of 2023, which emerged as the new bull market, where the moving average turned down on the average true range and stayed down until really just in the last few months, it turned back to the upside. So as this was breaking out, I was sort of telling my subscribers, you got to be a little bit careful. I have a course on this. The third course I do is on the trend and the volatility of the SPY and how to use that to kind of help you determine what are your best timeframes to be trading and where you have a lot more risk. If we go back and look, you can see when this moving average turns up, it tends to increase the risk profile of the market. Now, it doesn't mean the market can't keep going up. The market it's possible that we could keep climbing, but it's a harder time. It's a harder trade. It's harder to trade around when the volatility is high. So you need to take that into account, probably trade smaller size, probably just be a little bit more selective. And sometimes you could just step aside. I think a lot of times what it means is you just need to be looking for maybe some more consolidation until things quiet down a little bit. All right. So we want to recognize that when that's taking place. So I wanted to make sure I covered that and showed you really over the last, 4, 5, 6 weeks, we've had a higher volatility on the daily. And really over the last few months, we've had a higher volatility on the weekly. So both timeframes are sort of throwing off that warning flare to be a little bit more that there's a higher risk profile associated with this market condition. All right, let's move on. I do want to cover, I'm going to go through the just the 10-year yields, all right? And then I'm going to cover a few commodities. And I think I just kind of want to cover a few things that I think are pretty important. So if we see what's going on here with the 10-year yields, we are breaking the 18-month moving average. See how we turned up and held it back in 2021 and we held it, and now we're breaking that line. Now, that doesn't necessarily mean we're getting ready to crash to the downside or start a 2 to 3 year decline. But what it does mean is that the trend that was in place is kind of over, and we're moving into some type of a transitional phase where we could end up forming some kind of a trading range for a while. There is some more downside risk here. The next support level for the rates is probably right around that 330 to 350 zone, somewhere in there. So we could see this continue to drop a little bit in the near term. Now, I'm not necessarily looking for a massive decline, but one thing I want you to realize is that if we take this and we scroll this out and we zoom out and see what's really taking place, we are breaking a massive downtrend line and we got overbought. I mean, very dynamic breakout. You can see how kind of MACD kind of gives you this strong reading, both ADX and that. And we just got overbought. I think we need to work our way back down towards this sort of breakout area almost. And then I think, we've got, unless this is a really violent decline, I think we need to be prepared for this to turn back up. And, it's going to take a little while. I'm not saying this is going to happen this year. This is a longer term monthly chart. This could take, the next 6 to 12 months to kind of develop. But I would keep that in mind in terms of the way this is playing out. Yeah, we've got a little bit of a short-term drop here. In short term, I'm meaning maybe throughout the end of the year. Of this year, or maybe early next year, we start to see support come in or some type of a pattern flip over. So we want to watch the MACD as it comes back down to the zero line. The one thing I would tell you is that if we get real violence to this move and it's really a precipitous drop, then 5 is probably a cap and we end up forming a bigger trading range where the upside risk is not as great. All right, so I wanted to cover that. Let's look at gold. I wanted to show the difference between what gold is doing and what the silver is doing. So notice this breakout. Look at this really nice breakout. Strong momentum conditions on both the weekly and the daily. But there's been no pullback here. I mean, this is hardly even set back at all. We're still above the 18-week. Very strong condition, and we're seeing some individual gold stocks breaking out again. Even some ones that haven't broken out before starting to emerge. Something like GOLD is actually emerging out of a pretty big base. It hasn't done anything yet. So that's encouraging sign for gold. Now, silver is a little bit different. You can see that we're going through an ABC correction, breaking the 18-week line, this 18-week line, but we're still above the longer-term support level after breaking out of a big base. And we had a low ADX condition. The MACD is still in pretty good shape. We still got pretty good momentum. I think we need to spend a little bit more time consolidating, but I still kind of think this is an encouraging pattern overall. Okay, let's look at USO because this is interesting. Look at the way this monthly chart is developing. We had the big drop and big rally up, and look at this consolidation pattern. Almost looks like an ascending triangle, and MACD is holding the zero line. Now, that's on the monthly. We don't have any real strong selling. It feels like energy has gone through a bit of a struggle here. But it really hasn't broken down. Now, I do think it needs to break out. It needs to get through this 82.5 level. But what I will say is it might take a little bit of time because as I go through the individual stocks in energy, they don't look ready. For the most part, they don't look ready to go. They could trade inside the range. We could get a bounce and they could rally up, but it looks to me like it's going to take a little bit more work. But I did want to point this out from a bigger picture standpoint. I wouldn't count these things out quite yet. All right, look at copper. So this is a little bit more troubling the way this is pulled back. We did get our ABC, but it was a little bit more violent. We topped out after trying to break out through 30, and now we're all the way back down to the 18-month. This is a key level to watch. We haven't gotten a rally off of this level yet. I think this move is on hold for now. If we break let's just make sure I got this number right. I think that's 20, right around 25, 24 and a half. If we break through that, then I would be a lot more concerned about the copper stocks. I think that, that those trends might be completely over. Right now, they're just kind of down in a corrective pattern. Okay, let's switch over to the, let's look at the QQQ real quick, and then we're going to go through some similar requests that came through. So one of the things I wanted to point out here is if we look at the QQQ from a bigger picture standpoint, we turned at the 500 mark, created a pretty big tail off the high, and now we're creating a pretty big tail off the low, which is not that far away from this support zone right underneath. Okay, so I'm leaning, just looking at the monthly and looking at the momentum condition, MACD confirmed, ADX and DI confirmed. I'm more inclined to believe that this is not a big top. It's more of a consolidation pattern that we needed to work off an overbought condition. We got too overbought. We needed to drop this down. And if you notice what's taken place, on the weekly chart, we have made a higher bottom in price, but we're making a lower bottom in the MACD. All right, so that's reverse divergence. It's one of the signals or patterns that I talk about in my book. So what I would tell you is that I think there's a pretty good low in place. Now, it's very possible we need to come back out and check that out a little bit. If you notice on the daily, we really didn't have on the hourly chart, we did have a nice test. All right, but we haven't had that happen on the daily. It's possible we could come back down. It's even possible we can undercut this low. But what I'm telling you is, generally speaking, and based on what I'm seeing in the patterns themselves, when I go through thousands and thousands of charts, I think there's a pretty strong support level underneath. I think we should be looking for opportunities on pullbacks in the market. If we get a setback and it makes a higher low, I would think that would be a really encouraging sign. Even if we come back down here, we could, I think there's still going to be a lot of stocks that won't come down as much. So on this next drop, you want to be watching the stocks that are being really resilient at this point. One of the things I want to mention is I look at the Investors Intelligence Sentiment numbers. They have dropped dramatically off the high. There's been a pretty big drop in that. And that means to me, when you're in a bull market and you get a pretty big drop off an extreme level, the bulls were very extreme off the high, the bullishness, and we've dropped that down. I think that's we've kind of corrected that enough, and that again, that's sort of supporting the thesis that we should be looking for entries on a pullback. Now, if I'm right about that, One of the things we really want to see is improvement in the IWM. And the reason is that we want to make sure that we're getting improvement in the overall list and not just the top stocks in the market. I mean, if we only have the top 10 names working, it's going to be a little bit more difficult to make money. So we want to see improvement in this IWM sometime over the next week or two. It's trying on a relative basis to turn things around. It hasn't quite been able to do that. So something to keep an eye on. Okay, so I want to look at Apple real quick because I think this is showing something that I want to make sure everyone sees. When you're looking at your individual stocks, you'd be surprised at how many of these. I look at a lot of stocks over the weekend, and I couldn't believe how many big, giant green bars I saw after coming down to support. In some cases, they overran support a little bit, but really strong reversals that took place. All right, encouraging sign from my standpoint when I see that, and when we see a lot of them, we have to respect it. I think it kind of confirms what I was just saying about the QQQ in terms of underlying support, and we want to watch the ones that have held support, showing good momentum condition in place. An overall pattern could set up very quickly on any kind of a setback or something like that. So I do think Apple is one. We just finished with earnings. It's trying to work its way up. I think if we can form some kind of a little higher low and turn back to the upside, I think this would be definitely a stock to keep an eye on. Now, look at this WMB. So we've had a pretty strong pattern. Now, what I was talking about with energy, this is one that's kind of just going by its own merit. It's not really focused on what the oil chart is doing. It is, it's just kind of moseying along, doing its own thing. Big base breakout. It's in a trending mode with good momentum conditions. We're forming a little bit. It had a little bit of an undercut and rally pattern, undercut here, and now we're forming this higher low. It might be a decent little trading pattern with an opposing trend pattern developing on the hourly. On a bigger picture setup, I probably would look for this to consolidate maybe a little bit more, but the momentum is good. It's definitely a good stock to be on the lookout for. Now, I wanted to point this out. Look at how, I mean, CrowdStrike had about as ugly news that you can have. Very, very negative, had a big reversal to the downside, but look at what happened when it dropped down. It came down and it's finding support at this key support. It's back above the 18-month. It never closed below the 18-month. And it looks to me like that was a little bit climatic now that the MACD has worked its way back down to the zero line. So I'm not saying I'm buying this. Unless you're a trader and you have some skilled trading, I wouldn't be doing that. But I think this is a good sign overall for the market that the odds are we're probably looking at a correction and an ongoing uptrend for the market as opposed to the start of some big drop. Another thing to watch is some of the big names still, right? Look at what's going on with Meta. Meta went through this monster move to the upside. You can see it on the weekly. Look at the strength of the momentum condition. And now we've been consolidating, but look at what's taken place. Again, a reverse divergence not far from the zero line, and ADX has remained strong. So this is definitely a stock we want to be on the lookout for. You could even watch for some kind of a little setup here on the daily chart potentially. I think it looks pretty good from that standpoint. So Netflix, I think, has made a big move. Nothing's really changed here. The momentum is strong on the weekly. I'd like to see it sort of work its way sideways a little bit. It looks to me like it got a little tired and the 18 is starting to flatten. We do have the same pattern though. We have a reverse divergence. If you get a setup and you want to play this, I would make sure this holds. I would look for this to move up and then pull back towards the 18-day. I think if that happens and we don't show any real selling pressure, you could play this as it hooks back up. But generally speaking, just looking at the pattern, I'm kind of expecting that to spend a little bit more time consolidating. Now, I know Starbucks had some pretty big news. I mean, this CEO must be really legit, the guy from CMG, but here's what I'll say. Nothing's really changed here other than the fact that we've made an important low. We're hitting the 18-month line. We came into pretty big support, okay? But we're running into the 18 and the 40-month moving average. This is just a starting point. And if we're making a trend change, we're going to need some kind of a test and an upturn like that. So don't be in too big of a hurry. I'd be patient with this. Now, I did want to highlight a couple stocks that look attractive to me. In the same area. Look at this software ServiceNow making a higher bottom, holding the moving averages, cupping around with low ADX and strong ADX on the monthly. And then SSNC is another one, big breakout in the software area, trying to consolidate. I would look for a little bit more of a pullback, but definitely a name I would be watching, especially based on the action. If I'm looking at technology, I'd probably favor software right now. Those patterns look better to me. Thanks for watching today. So if you have any stock requests you'd like me to analyze on next week's show, you can send it to stocktalk@stockcharts.com, or you can just put it in the comment area. Also, my YouTube channel is called Invest Like a Pro. Have a great week, and we'll see you next time.